In this video, we're going to look at how to actually read the news inside the charts and what to look for and what comes next. I'm going to go through Apple, Nvidia, Tesla, Microsoft, and so much more. We're going to look into the Ethereum case and look into what that could actually create for the crypto market. And it could be very interesting. Okay, let's run the numbers. In market news today, Apple loses $115 billion in market cap as the regulators close in. Apple is also facing issues in a European probe over adherence to the Digital Markets Act. In the US, the Justice Department and 16 attorneys general are suing the iPhone maker for violating antitrust laws. Apple is being accused of blocking rivals from accessing hardware and software features on its popular devices. This has caused Apple's stock price to slip. As sophisticated traders and investors, we understand the CTKS structure determines price waves. We've seen Apple's price come down, but where did it come down to? We understand that Apple is a Tier 2 chart, and it's within the context of the Tier 1, Tier 2, and the Tier 3 charts that we can look at the market. Let's have a look at the CTKS structure. Apple's share price can look really random when you look at it just on a naked basis. You're saying, where is Apple going to? And of course, bad news doesn't go well for stocks. It also doesn't go well for crypto, and we'll be talking about that momentarily. What we really need to do is to understand where the structure is inside the market. So let's pop on the indicator. Apple has been trading for in excess of 15,500 days. That means it has a lot of structure inside it. You can see that there was so much structural resistance up here when the Fed decided to keep rates as they are. The market responded incredibly well, and Apple came into really steep structural overhead resistance at that 178.50 mark and above. It simply couldn't hold it, and negative news saw it pull down to where structural support. But you'll notice it flew through so many structural levels, as is the case on severely bad news, but it always gets caught by structure, and we've seen this structure get caught again and again. What you will find, price movements are not random. They're moving simply between levels of CTKS structure. If it can't get above, it's going back to the one below. It can't get above, it's going back. It puts in a bit of pressure. You'll often see these fake outs before things start to really get going. And around the FOMC meeting, it was absolute mayhem inside the markets. But even though Apple's price came up through 1, 2, 3, 4 structural levels, notice that it came right back again, because this is how structure acts. It's a ceiling on price appreciation. Basically, the sellers around structural levels, structural resistance levels, when the price was coming up, they're saying sell, 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 and they will push the price down. That's why you know what is occurring inside the market structure. And if it can't get above, and it clearly couldn't get through any of this structural overhead resistance, it's going to be pushed backwards. But of course, the negative news saw the descent of price through multiple safety nets. When markets go red, you must know the structure, or your account will be obliterated. What about when we look at another indicator such as Tesla? Does Tesla obey CTKS structure? With the lead up to the FOMC, we saw a lot of in-market volatility, but structural levels act as safety nets, and they tend to rebound price, especially up to large gravitational areas, as is the 174 mark on Tesla. And Tesla has been trading for nearly 5,000 days, so these structural levels are important. We've seen that Tesla couldn't get above that 175. It had a positive fresh air gap here, but it couldn't make it to the 182. We've seen before what happens when price can't get through a structural level. It comes down to the one below. What this simply means is that structure will hold price. If we can't get above this 174 level, we're coming back to the 168, so just please be aware of that. But we may just wobble around that area if the bulls come back in. Always keep in mind, if it can get above, it's going to the one above. If it falls below, and you can see some structural levels are lighter and some structural levels are heavier. The heavier ones are stronger. When looking at Microsoft, structural levels play a very large role in how the market moves. The markets are always moving in price waves. They're always going up and down. In an uptrend, you'll see multiple waves of price come up and down. In a downtrend, it's exactly the same. Price can go up and down. You've got to be aware of this factor. It's Rule 4. Price moves in waves. Now let's pop on the structural indicator for Microsoft. Microsoft has been around quite a while. It's been trading for 13,700 days. Let's have a look. We can see that Microsoft has been making its way up to structural overhead resistance, and when it got caught by the sellers here, they flattened out Microsoft's price. That's why it's really important to know where the structure is. We've just gone through the CTKS structural levels, looking at the trading view indicators on Apple, Tesla, and Microsoft. But let's check out Nvidia, and then we're going to turn and look towards Ethereum. Ethereum, some interesting stuff is happening, and you must be aware. It impacts the entire crypto market. The FOMC meeting always causes shockwaves inside the markets, and we can see Nvidia's price has basically been flatlining throughout this time. Nvidia does have the attention of the entire market. But what are the structural levels telling us? Let's pop on the indicator. Nvidia has been around for quite a while, in excess of 9,000 days, and CTKS Structure marks up all of it. We can see that time and time again, this 912 level was a really big problem to Nvidia. It hit it again and again and again and again and again. And look at this. This is quite intriguing. It's starting to get above it. I'll look at the structural levels above Nvidia's price at the moment. But just have a look at how structure contains price. We can see that Nvidia was restrained by this 912 structural resistance level and also caught by the 854 level. If you know where this structure is, you're not freaking out as price is coming down, because you know in all probability it's going to ride in a wave. And when we get a clearer direction, you can take more action. And when prices are coming down, hopefully you're dollar cost averaging in, because there's some great bargains when you do so. Let's have a look at Nvidia's higher structural levels. Ooh-wee, this is looking pretty sweet. This is another reason that you need to understand CTKS structure, because when structure gets above and it has a positive fresh air gap, this is really good. We may see Nvidia trading up towards this 964 mark, but we always have three-dimensional thinking. We understand that price is always moving in a wave. It could come up to the 964 level, and there's a good probability that it will. Also, it could decay down, but there's quite a lot of structure and quite a lot of opportunity to level in at these areas. So just keep these things in mind. Sophisticated investors and traders always have three simultaneous strategies: an up strategy, a neutral strategy or a consolidation strategy, and a negative strategy, and they take advantage of all three to profit. Sophisticated traders and investors understand Rule 446, that all markets are intercorrelated and interdependent. This fundamentally means that if Apple, Microsoft, Nvidia, Tesla are moving in certain directions, that will actually impact the entire crypto market. This is unheard of for a lot of people to think this way, but that's how sophisticated investors and traders think. They look at all markets. They go further than that as well. They understand when certain things happen. For example, when the DXY was decaying after the FOMC meeting, which caused the markets and crypto to rally. there was always the possibility that sharp angles could reflect in the DXY, and that has been the occurrence. And that's brought crypto, which is this blue line representing Bitcoin, down at the current time. Please make sure that you keep your eyes on the DXY and also on yields. You can see the US 2-year and the US 10-year have also been rallying, but overall there is a downtrend here. So something to keep in mind with the yields. If the yields are in a downtrend, silver and gold are likely in an uptrend, but silver and gold are also impacted by the DXY, which is in overall uptrend territory. Just bear in mind, when the DXY tends to rally, it's like everybody's taking their money off the table and putting it in their pockets and saying, oh, I'm not quite sure what's going on. And you'll get these kind of retracements inside the market. Please be aware, all markets are intercorrelated and interconnected. Our channel is not a mainstream channel. We're for sophisticated traders and investors. If you want to know how markets work, please subscribe. You'll gain knowledge on this channel you won't gain from anywhere else. Just as a little bit of a bonus, when we look at the DXY rallying up, expect the Aussie dollar and the euro dollar to reflect the inversion of that. That means that we expect when the US dollar increases or appreciates, we expect a depreciation in the Aussie dollar and the euro dollar. This is good because you can look at crypto, especially through the lens of the euro dollar or the Aussie dollar. You can see literally everything is related, but the price waves are always measured by CTKS Structure. Sophisticated traders and investors use CTKS Structure to understand where things are going. For example, we saw on Apple, Tesla, Microsoft, Nvidia as well. Structure is always obeyed. Now, we're going to look at something really important in the crypto market. We're going to look into ETH, and then we're going to look into Bitcoin. These are really important things to be aware of right now. The Securities Exchange Commission, led by Mr. Burns, Chairman Gary Gensler, is probing the Ethereum Foundation. And you know, when Gary starts to probe, it's going to be uncomfortable. When looking at the news, it's really important to separate noise from signal or noise from fact and try to understand why things are occurring. What is the SEC trying to do? It's trying to classify Ethereum, which is the second largest crypto, as a security. Now, what does this actually mean? If Ethereum is classified as a security, it will be subjected to incredible laws that could see it coming off a lot of exchanges and moving into mainstream finance. But it's a little bit more complex than that. As a decentralized protocol, Ethereum doesn't really belong anywhere. So this is a big problem to the crypto market. We've also seen this very vigorous application of the SEC's power as BlackRock and others are filing for ETFs on Ethereum. Now, we saw what happened with the Bitcoin ETFs. Initially, the price of crypto was driven down by our good friend Gary. That created immense buying opportunities for sophisticated investors and traders, and then only to see the price absolutely rally. The thing to understand, this is not FUD. This is not fear, uncertainty, and doubt. The SEC is demanding that certain companies furnish any documents related to financial records that they may have had regarding dealings with the Ethereum Foundation. The word flourish is pretty apt in this particular context. The SEC always wants all the information and it gives none in return. Even if you've just started your journey learning and understanding the markets, it's important to gauge yourself as a professional, as a sophisticated investor and trader. Don't just be a trader and don't just be an investor, be both. Because you'll need both skills to be sophisticated. When we look at Fortune Crypto, it said the SEC tries to put the Ethereum toothpaste back in the tube. Now, why is it doing this? Obviously, the powers that be want the price of Ethereum to come down. They know that the mainstream will just jump on this and kick it to death. That is going to cause people to flee from the crypto space. Hang on a sec, Ken. Why would it cause anybody to run if the prices go red? Oh, yes, that's right, because people sell on red, but sophisticated investors and traders buy on red. They're a completely different breed. But also, being sophisticated means that you understand the structural levels that are coming into play as price comes down. And it just doesn't do this. It does this, then that, then this, then that, then this. And if you time the sweet spots and have a look at the trade in yesterday's video, which was literally around 900 US dollars, just turned in under 24 hours, riding these kind of waves can be very, very valuable. We know as sophisticated investors and traders, and the key word is "and," because you want to invest and trade. When you look at the bull market, and we're in one for crypto, it's going to be just unbelievable, and the melting face hasn't even come close yet. But we know inside Ethereum structure is controlling this price action. So let's pop on the indicator and see what's cooking here. Okay, Ethereum has been trading for in excess of 3,000 days. We can see ETH, with the rallying from the FOMC meeting, came up to this 3560 level, couldn't get through it, tried and tried again, and has been pushed down. It lost the 3520 level, and it's seeking to get down to this around 3400 level. One thing is really apparent. Retail will be selling this Ethereum news, no doubt about it. The good news is that Ethereum has quite a lot of structural support underneath the current price, but the unfortunate thing is it's quite weak. That means if price comes down, it could shoot through these levels until it finds firmer structure, but it will slow it down. Always have that professional, sophisticated mindset that it can also go up, because if Bitcoin goes up, it's going to drag Ethereum with it. Sophisticated investors and traders are basically saying at all times, I have three scenarios. It can come up, it can go flat, or it can go down. And they just weight those probabilities. The probability is for negative price momentum, but also just the awareness that price is always moving in a wave. It's coming up and down, up and down. And if you look at the Solana trade from yesterday's video, and I do urge that you do that because it's really helpful to you, you're going to see that even if prices come down, if you're buying effectively and just timing the sweet spot in the market, you can make a fortune. But this means that you know where the structural levels are inside the market. And if you would like to get any of the structural indicators, you can pop across to CTKSMethod.org. We've discussed a few. We've discussed Apple and Tesla, Microsoft, Nvidia, and now we've had a peep at Ethereum. And of course, we need to just have a look at what Bitcoin is doing. But all the structure for everything else that's not covered is available through those trading indicators, and you can pick them all up from CTKSMethod.org. The reason that we look at the main markets, and especially the stocks that underpin them, is Rule 225, because Bitcoin and crypto cannot escape the stock market's gravity. The stock market is incredibly important for measuring risk on and risk off behavior. If the stock market was, for example, tanking down, hey, that is a problem because it's going to pull everything else down with it, including crypto. That's not what we're seeing right now. We're seeing that the stock market is relatively healthy. But please keep a look on the major indices and check your DXY structural levels and the US 2 and the US 10-year. Sophisticated investors and traders have a lot of rules, and Rule 45 is important as well. No alt. That means Ethereum. It means Solana. It means any meme coin that you're looking at can escape Bitcoin's gravity. So gravity is a very important concept to understand, and I can go through that in later videos. But the first thing, you just need to understand that the alts are dependent on Bitcoin's movement. As I was saying yesterday, in yesterday's video, many people would pile into Bitcoin. I was suggesting that maybe you don't do that because after crunching through so many structural levels, you can see again and again and again, it's going to get exhausted and it will have to come down and consolidate and prove to us that it can actually make it through. It's been going in the other direction, and I believe that's largely because of Gary working for the banks, Gensler. And you would have probably noticed that the alts that you're trading and investing in, and hopefully you're doing both, not just investing and not just trading, please do both because it will unlock incredible financial gains. If not for the SEC news, we would have seen Bitcoin doing much, much better. But because Gary has come out and is launching his Elizabeth Warren type anti-crypto campaign, because of course the banks don't have money, so they can't have any more money flying off to the crypto land. The key to understand, just prepare yourself for a lot of incoming volatility, and that volatility can make you a lot of money. So don't worry about volatility. Just worry about understanding that you understand where the structure is inside the market, and you're looking at that structure at all times. As a bit of a bonus, keep your eye on Solana, because if Ethereum is coming down, of course it will cause negative price momentum because it's the second largest crypto. It's really big. If Ethereum is bleeding and people are going into the DXY, yes, the US dollar currency index, it's going to pull the entire crypto market down. But when things start to rebound, keep your eyes on the Solana ecosystem. You may see some really interesting things happening. If people are getting scared about Ethereum, they will naturally migrate into Solana. Solana has a fantastic ecosystem. I would like to thank everybody for their amazing comments. We had so many fantastic shares and I wanted to share them today, but with the Ethereum news coming out, it felt like a lot better idea to actually let people know how to prepare. That is, the SEC attacking Ethereum and causing this negative price momentum. Please just be aware of this. This is not FUD. This is something that you need to prepare for. There will be incredible opportunities arise in the coming weeks. Do not run on the red. And I want to share all those tricks and tips that so many of our incredible community, our global family, wanted to share with other people. I want to pull those together and share them in one video. If you have any tricks or tips that you would like to share with others inside our global family, please do so. I'd like to collect them and put them all together for you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.